What's up guys, Alvaro here and welcome to the Bilingual Stock Market channel again. On this channel we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update. So I want to break down some technicals going over S&P 500 and the Nasdaq 100, but also breaking down from a technical standpoint for stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And today we had, in my opinion, guys, let's say a flat day, best case scenario, because we saw a massive drop in the major indices yesterday, in most cases more than 2%, and today we saw some sort of a little recovery when it comes to the S&P 500, which went up today 0.16%, Dow Jones went up 0.26%, however, the Nasdaq went down 0.24%, and the Russell 2000 ended up going down 0.20%. And when it comes to the good old 10-year Treasury yield, this indicator went down today. And it didn't go down a lot. It just went down 0.007%. So we can make the case that it closed today's trading session flat for the most part. And if we take a look at the technical chart of the 10-year Treasury yield, you guys can see over here that the bulls of the 10-year Treasury yield, the inflationary bulls, were rejected yesterday and today as well at 1.55%. 1.55% is a previous area of support that acted as such on two occasions back in late May and also back in early June. So watch out for that area, for that level, guys. I think that if the 10-year Treasury yield happens to burst above 1.55%, maybe the next gap up to 1.63% could be filled. And that is going to be very, but very negative for higher multiple stocks, tech stocks, and growth-oriented stocks. 1.63% is a previous area of resistance in which the 10-year Treasury yield, fell back in late May and also back in early June. So we saw a nice drop into the closing bell today when it comes to the 10-year Treasury yield. And if we take a look at the relative strength index of this yield on the 4-hour chart, we can see that yesterday the relative strength index of the 10-year got very overheated. It went up to 82 points. So we could make the case that the 10-year yield is due for some sort of pullback. And in my opinion, guys, and today the markets acted out of fear and uncertainty. Take a look at this. So the best performing sector today was utilities. I have told you plenty of times here on the channel that the utilities sector is a defensive sector. So the utilities sector rather is a sector in which the big money of Wall Street goes after when there is uncertainty out there. And as of now, we have two big uncertainties. We have the debt ceiling, which has to be raised anytime soon by the Congress. And on top of that, we also have inflation fears because the 10-year Treasury yield is going up. So the markets did today, for the most part, what they were expected to do in a day in which we have a lot of uncertainty out there. So, and I was saying, circling back to what I was about to tell you, in my opinion, what is going to decide upon the behavior of the 10-year Treasury yield in the short term is going to be the CPI data report that is going to come out on October 13. If that report happens to come out worse than expected, if we can tell that inflation is running way hotter than what most analysts out there are expecting, then that is going to obviously make the 10-year Treasury yield run up in a very aggressive way, and that is going to be even worse for tech-oriented stocks, growth stocks, and so forth. So let's see what happens, guys. I also wanted to point out in this video that the worst season of the year for the stock market kicks off on September 1st and it ends on October 15th. So we still have probably 15 more difficult days ahead of ourselves. And if on October 13 we happen to have a let's say better than expected CPI data report, then we are going to be just 2 days away from the end, from a seasonal standpoint, of the worst season of the year when it comes to the stock market. So I am expecting the stock market to still be a bit volatile into October 13 and into October 15. And when it comes to the S&P 500, let me pull up here the 4-hour chart of the S&P. And as I said in the introduction of this video, the S&P went up today just a bit, 0.16%, and it closed today's trading session at 4,359 points. Something that really caught my eye, and that it is still catching my eye, guys, is that today and yesterday as well, we saw a massive pain when it comes to tech stocks, growth-oriented stocks, and higher multiple stocks in general terms. However, Tesla, which is a component, which is an important component, let's just put it that way, of the S&P 500 and the Nasdaq 100 for that matter, ended up having a green day, guys. And I said in yesterday's video, and I am going to say it again, you guys know that I am a Tesla bull, but I am aware that Tesla is a very, very expensive stock. So what the heck is going on with Tesla? Tesla should be, if we take into account all the pain that we are seeing in tech stocks such as Microsoft, Apple, Amazon, needless to say, higher multiple stocks, stocks of companies that don't make any money yet, like, I don't know, EVgo and QuantumScape and SharesPoint and so forth. So we are seeing massive pain all over the place when it comes to higher multiple stocks, and the king of higher multiple stocks, such as Tesla, is going up. That is still a puzzle piece that is on the table. Okay, so now let's go ahead and take a look at the S&P. And since we close today's trading session at 4,359 points, 43.59, then the bulls still need to take on 44.24, guys. That is the most important task that the bulls of the S&P have ahead of themselves. 44.24 is a previous area of overhead resistance in which the bulls of the S&P felt on 1, 2, and 3 occasions in the course of July. And on top of that, we are talking about a former area of overhead resistance that is coinciding on the 4-hour chart with the 180 SMA. So that's the most important task for the bulls of the S&P. If we take a look at the relative strength index of this index, it is at 36 points, so we still have more room to the downside, guys, no doubt about it. The most important task, or the two most important tasks for the bears of the S&P tomorrow, is going to be, first of all, taking on 43.27, which happens to be a previous area of support that acted as such on 3 occasions back in July. And after having breaking down 43.30, 43.26 to the downside, then they are going to have to deal with 4,300, which also happens to be a former area of support that acted as such back on July 8th. And that is also a spot in which the bears of the S&P felt on Monday of last week. So the S&P is still looking very bearish. We are trading below the moving averages, and mind you, we could see a death cross unfolding in the case of the S&P maybe tomorrow or maybe on Friday the latest if the S&P keeps on going lower. So I don't know, guys, this isn't looking any good. Let's see what happens. You never know when an index or a stock is going to bottom out. But as of now, and as I just said, I think that since there is a lot of uncertainty out there in the market, we are not going to see a definition or a solid push higher in the indices until we get the CPI data report on October 13. Nasdaq 100 went down today 0.12%, and it closed today's trading session at 14,752 points. And in the case of the Nasdaq 100, guys, the bears did their homework today, no doubt about it. I said in the video that we posted yesterday that the main task for the bears of the NDX was breaking to the downside 14,777 points, and that's exactly what they did. So the NDX ended up going down 0.12%, and what can I say, guys? The bears are in total control of the NDX, and most of the big tech stocks out there, Apple, Microsoft, Amazon, Google, and so forth, Facebook, just to name a few of them, are in an oversold condition. We can also see the relative strength index of the NDX at 26 points. So the Nasdaq 100 is officially in oversold territory. So we might see a relief rally. But as of now, the sentiment of the NDX is very bearish. And yeah, that is just the truth of the matter, guys. I think that while there's uncertainty out there in regard to the 10-year Treasury yield, we are not going to see a solid recovery in the case of the NDX. And the bulls, the main task for the bulls, and this is the same task that I pointed out in yesterday's video, is going to be taking on 15,150 points, which happens to be a previous area of resistance in which the bulls of the NDX already failed on 9 occasions. We are also talking about a former area of support that acted as such back on July 23rd. And on top of that, we are talking about a former area of support and resistance that coincides with the 180 SMA on the 4-hour chart of the NDX. So this is ugly, but this could get uglier, guys. Let's see what happens tomorrow and in the upcoming days with the battle 10-year Treasury yield. Okay, the first stock of this video, Sklz. Sklz was absolutely killed today, guys, going down 5.94%, and it closed today's trading session at $9.97. And guys, take a look at what I am telling you, because I have been talking left and right about higher multiple stocks. In the case of Sklz, this is a stock that is trading as of now. Oh, I have the run. I need my trend line over here. Okay, so in the case of Sklz, this is a stock of a company that is trading as of now 77% of its highs. However, at the current price of the stock of this company, near $10, this is still an expensive stock. So whoever is buying Sklz at these levels, and despite the fact that the stock of this company is, I don't know, like 80% of its highs, you are taking a gamble on the future, guys. You're paying an expensive price for a stock that you believe is going to do a great job farther out. Let's say, I don't know, 4 or 5 years out. So I like the fact that if I happen to pick up some shares of Sklz, I am going to get almost an 80% discount. But you gotta be aware that while we have some sort of uncertainty in regard to inflation and in regard to the 10-year Treasury yield, Sklz can go lower, even lower. So I am going to zoom in here on the 4-hour chart, and if we happen to see a relief rally in the case of ticker symbol Sklz, because the relative strength index of the stock of this company is very low, it is at 25 points. So I would like to see Sklz, guys, bursting above $10.20, which happens to be a previous area of support that acted as such back on August 19, and it also acted as lower support back on September 21st. So I need to see Sklz bursting above $10.20-ish and starting to consolidate slightly above that area. If I happen to see a process of consolidation, as I just told you, slightly above $10.20-ish, I am going to be tempted in order to pick up probably 300 or 400 shares of Sklz, in which case my price target is going to be the next important area of overhead resistance for this stock near $14. $14 is an area of lower support that acted as such on 3 occasions between July and August. So we are talking about a former area of support that was broken to the downside, and that on the way of Sklz to the upside is going to act as a new resistance. So if I can take this trade the way that I am describing it, picking up some shares at $10.30 each and selling out of my shares at 14 bucks each, I could be making a 25% profit. That would be a very solid profit, no doubt about it. So watch out for Sklz, guys, tomorrow or in the course of the upcoming days, bursting above $10.10 and starting to consolidate slightly above that area. And let me zoom in here, guys. Watch out here for the 50 SMA. We could see a golden cross maybe in the upcoming days. If Sklz starts to pull up, we could be potentially seeing this 50 SMA crossing above the 180 SMA on the 4-hour chart. And the second stock of this video is going to be Pypl, guys. And this was a dip that I bought today. And guess what happened as soon as I bought the dip? It kept on dipping. It happens, guys. It is what it is. So Pypl went down today 1.22% and it closed today's trading session at $259. So let me show you the position that I opened today on Pypl. So I purchased 30 shares at $262.50, and as of now I have an unrealized loss of 105 bucks, but I am not worried at all about this unrealized loss because I love this company. I am a Pypl bull, and I just want to build up a swing position over here. So as I just said, Pypl went down today 1.22% and it closed today's trading session at 259 bucks. So what would be my plan when it comes to the position that I just showed you? I would like to add more shares of Pypl to that position if Pypl happens to pay a visit tomorrow down to $256. $256 already acted as support on 3 occasions between May and June as well. And if we take a look at the relative strength index of Pypl, it is at 29 points. So the stock of this company is very oversold, guys. So it is already trading in oversold territory. So I am going to be more than happy of buying 30 more shares, I would say, of Pypl at 256 bucks. If we happen to see a relief rally, if the Nasdaq and the Nasdaq 100 happen to have a solid relief rally tomorrow or maybe on Friday, then my price target in order to close this trade is going to be $275. 275 bucks is a previous area of overhead resistance in which the bulls of Pypl failed back in mid-June, and they also failed back in late April. So I am, what's my average price over here? 262 bucks. So if I happen to close this trade with the 30 shares that I just showed you, so my average cost is at 262 bucks. So from 262 bucks up to 275 bucks, I could be making a 5% profit. Or on the flip side, if Pypl happens to pay a visit down to $256, and if I happen to be able to average down the position that I just showed you, I am going to end up having something like an average cost of $259 up to 275 bucks. I could be making a 6% profit. So that's my plan when it comes to Pypl. And if any of you is interested in opening a position on Pypl, I think that 256 bucks is the lowest that Pypl can go, taking into account that the relative strength index is at 29 points. Or let me rephrase that, guys. So if the Nasdaq and the Nasdaq 100 keep on going down, then Pypl is obviously going to keep on going lower. However, I don't think that Pypl is going to go any lower than 256 bucks. $256 before seeing a relief rally. And now let's go ahead and take a look at the stock of a company that I haven't broken down in quite a while over here on the channel, guys. Rocket Companies, ticker symbol RKT. And in the case of Rocket Companies, the stock of this company went down today 0.55% and it closed today's trading session at $16.33. And talking about long-term discounts, guys, take a look at this. So Rocket Companies is trading as of now 66% off its highs. And if any of you is thinking about inflation, higher interest rates and stuff like that, what about Rocket Companies, guys, as a mid-term play? So let's say that inflation gets out of control and the Federal Reserve says that they need to increase interest rates sooner than expected, then this might be one of the beneficiaries, because Rocket Companies is an online lender and you can get a loan to buy a car, you can get a mortgage, and whoever lends money in a high interest rates environment obviously gets benefited. So in the case of Rocket, guys, I am going to zoom in here on the 4-hour chart, and I really like $16.20, guys. $16.20 acted as lower support for Rocket back on September 20th, and we could make the case that maybe, and I am still spotting this left and right, that maybe at $16.20 we could be seeing over here a double bottom formation, guys. This could very well be the case. So if a double bottom formation happens to unfold at $16.20, and after that we see a push higher of Rocket Companies, then the gap up to the next important area of overhead resistance at $19.53 could be filled. Let me draw a line over here. So let's say that Rocket Companies starts to consolidate slightly above $16.20, and therefore this double bottom formation happens to be completed. Then from $16.20 or $16.30, once we have, let's say, confirmed from a technical standpoint that this double bottom formation is playing out, so picking up some shares at $16.20 and selling out of those shares at, let's say, $19.50 or $19, we could be making a 16% profit, guys. That would be a very solid profit, and watch out for a potential golden cross unfolding here on the 4-hour chart. I think that if Rocket can reverse this terrible downtrend that we are seeing here on the 4-hour chart, eventually, and maybe in the course of the upcoming days, we could see potentially the 50 SMA on the 4-hour chart crossing above this 180 SMA. Now, that is going to be very bullish, and that is going to be another ingredient in favor of a double bottom formation to be completed, and therefore seeing a push higher up to $19.50-ish. So watch out for ticker symbol RKT. And the last stock of this video is going to be, I mean, I just said that Tesla is an expensive stock, right? And it is, actually. But what about Virgin Galactic, guys? This is such an expensive stock, and obviously Spce couldn't be, I mean, the situation couldn't be different from what we are seeing as of now. This is a very expensive stocks that I'm not even gonna say that trades on higher multiples, guys, because Spce as of now doesn't make any money. So this is a different level. This is a whole different level when it comes to trading on higher multiples, because we don't even have any multiples to estimate any revenue or profit in the case of Virgin Galactic. So this is the perfect definition of a speculative stock, and in an environment in which the 10-year treasury yield is going up, we cannot expect anything but a drop in the case of Virgin Galactic. So the bulls of Spce managed to find support today at an important spot, guys, because $23 is a previous area of support that already acted as such for Virgin Galactic back in mid-April. So if Spce starts to consolidate slightly above $23, that might be a buy signal, guys, I'm thinking, because that is going to imply that the bulls are respecting, or that the bulls are preventing the bears from taking on this very important area of previous support at around $23, and that might be a signal that the bulls of Spce are gathering momentum in order to make a push higher. In the case of Spce, I am holding the bag over here, so let me show you. I own 100 shares at an average cost of $33.78. As of now, I have an unrealized loss of $1,104. So I am going to be willing, in order to average down my position, if I start to see a nice process, or a solid process rather, of consolidation slightly above 23 bucks. For those who are interested in taking a trade on or with Virgin Galactic, if any of you pick some shares at 23 bucks or 23 bucks and 50 cents each, let's say, once you have confirmed from a technical standpoint that 23 bucks was respected, that this previous area of lower support is being respected, then a realistic target, guys, in the case of SPC might be $33. 33 bucks is a previous area of support that acted as such back in June, but we are also talking about a former area of overhead resistance in which the bulls of SPC felt back in March, and they also felt back in January as well. And you guys know that SPC is a stock of a company that is extremely sensitive to news. So whenever we have news about a potential flight test or something like that on SPCE, we're very likely to see another push higher of Virgin Galactic. So picking up some shares slightly above 23 bucks and selling out of those shares at 34 bucks or 33 bucks ish, we are talking about a 30% profit. In my case, and since my price, my average cost is at $34, let's round it up. So if I happen to pick up 100 more shares, I am going to end up having an average cost of 26 or 27 bucks. So if I happen to pick up 100 more shares, I am going to be selling covered calls, most likely. So from $26, let's say, up to 34 bucks, I could be making a 20% profit. So I am not in a rush in order to sell out of my Virgin Galactic shares. And I know that as soon as we get news about any potential flight test taking place anytime soon, the stock of this company is going to be off to the races once again. And with SPC, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys once again tomorrow, 3 or 4 hours after the market closes. Peace out.